Yo, what's up, guys? This is Sage Chino. Welcome to 2023. In this lecture, I'm going to explain to you how we can identify high probability points of interest, POIs, right? So I'm going to explain from what I've just drawn on my chart, right? Say you have a sales scenario like this one, right? Then this is where your impulse move actually originated from, right? So you are going to choose an order block that is showing you that it is actually manipulated price, right? The institutions have used that order block to manipulate price, right? Say that there was a previous high that was here, right? There was a previous high that was actually here, right? And price moved slightly higher than that zone, right? To trap liquidity. This should be a liquidity grab above this previous high. There are buy stops liquidity that price actually manipulated. Then they moved on to break these previous lows, creating a BMS, right? So now we are saying when price is actually correcting, coming back to our zone, right? We are simply going to mark that order block that actually manipulated price, that took liquidity there, right? So these are the POIs that we're going to be using in this year 2023, right, to improve on our trades or to get a high probability trades and entries, right? We only want to be using order blocks that actually manipulated price, right, which happens to be institutional candlesticks, right, as I have written on the topic of this session, right? So those zones are actually going to give us high probability trades. I need to get okay, scenario number 2, right? Say that we get our impulse move originating from here, right? We have our impulse move originating from this zone, right? It drops, right? Then in the way, right, it creates some accumulation, right? Say this is accumulation that it was doing, right? This is accumulation. Then after that accumulation, right, price just spikes above that accumulation. Then it continues to go down to break this previous low, right? So now this suggests that this high, right, this move actually manipulated price, right? This high was actually manipulating this high. They were taking liquidity from this zone, right? So now when we are marking our point of interest, right, we are now considering that order block that took price, that took liquidity from this high, right? That took those buy stops liquidity, right? And broke this previous low, right? So as our price is coming back into that region, now we know that this is a high probability POI, right? So whenever we are analyzing our corrective move, we are waiting for a corrective move to reverse, right? We focus on the impulse move, the previous impulse move that we actually got, right? And we try to spot zones where we have liquidity grabs, right? Usually there will be single candlesticks, big candlesticks that just wipes liquidity. It should be a single candlestick, right? Usually if you are analyzing from 4-hour time frame, if you shift to 1-hour time frame, right, that candlestick should still remain as a single candlestick, right? It should show you that it was a single candlestick that was used by big institutions to take liquidity, right? Hope this is clear. Okay, so I'm going to use Euro USD for my case study, right, to explain what I've just given to you, right? Okay, so if you look at this move, right, where this high, right, that was violated, right, that's a BMS right there, right? Got a BMS here, right? So the moment we get our BMS, right, we are looking at the corrective move, right? This corrective move, right? This corrective move. And we want to see where we can buy our high probability zones, right? So our focus comes to this impulse move, right? You start from where the impulse move actually started from. It started from that low, then it went up there, right? So that's the impulse move that we're going to focus on, right? So the first thing that we look at, right, remember I explained about premium and discount, right? You're going to look at your premium and discount like that, right? Premium and discount. Then you're going to mark a zone below the 50% zone, right? This is clear to everyone. I explained this concept on the previous videos, right? So this is my 50% mark. I can remove these two. Okay, right? So I'm going to consider POIs that are going to come below this 50% mark, right? PIOs that are below that 50% mark, right? You also have to look at concepts like trendline liquidity. For example, this was trendline liquidity, right? It tells us that we're going to trade below these zones. You're going to look at things like imbalance, right? There was some imbalance there. That means that our POIs should be below these zones, right? So having said this, if you look at other zones below that, there is no imbalance and stuff, right? So having looked at those zones, let's remove this because that's not the focus of this session, right? So we're going to consider all that, right? But as price was pushing upwards, now you are trying to spot, you try to spot zones where your price actually manipulated, right? Where there was some consolidation, price manipulated that, right? With some institutional candles. Remember I said the institutional candles, they will be quite big, they will be big compared to the candlestick in that region, right? Or they're going to give you wicks as those institutional candles, right? So in this case, if you look right at the bottom, right, there was some consolidation that was here, right? Then on that consolidation, if you check, right, where it ends, these were actually equal lows that were right there, right? Almost like equal lows, right? These are equal lows, right? At that point, right, we got a big candlestick that swiped at these lows and it closed back in the zone, right? Then the next candlestick, it was very big, it moves fast from that zone. So that's a sign of institutions involved in that region, right? So they are wiping stop losses from this what? From this low. So there is liquidity that has been wiped from this zone. Remember, I once mentioned something that if you don't see the liquidity, you become the liquidity. So in this case, we're already seeing that there was liquidity there, and the liquidity has been taken already. So these guys, they no longer have business to this downside. What's left is for them to push upwards, right? So now we are using that candlestick as your POI. You are just taking that block as your POI, like this one, right? Just mark it as your POI, as your relevant POI, right? Remember we said we marked the candlestick and it's weak, right? Okay, so this is now our relevant POI, point of interest, this one, right? It becomes our what? It becomes our POI, right? Let me just label it. Right. So this becomes our relevant what? POI. Okay, so now it means that what you're going to do now, you're now using that as your POI. You can take your item like that. Then this is our trade that is going to come from this region, slightly below that range. Put your stop loss. Then you target those what? Those previous highs. Just target these previous highs, right? So this was a trade from this zone, right? So this is a relevant POI. Why? Because there was liquidity that was grabbed from that zone. So whenever you're analyzing, make sure that the POIs or the order blocks that we're going to choose are the ones that actually manipulate the price. Don't just pick the last candlestick, then you say this is a POI. No, right? It won't work because it didn't manipulate any price. If there was no manipulation, then don't consider that as an order block, right? Just consider those that actually manipulate price, right? So this one, this was an end right there, right? If you look at it closely, you realize that there was another POI, right, just above this zone. If you look at this high, right, let me actually remove what's here so that we'll focus on that one, right? We can use this one to reduce our risk because this risk is too much, right? Risking about 132 pips to make 328. Of course, the risk reward ratio is good, more than 1:2, right? But then the risk is too big, right? How will you actually reduce that risk, right? So if you look at this region, remember this is a 50%, right? If you look right there, oh sorry, if you look right here, you realize that there is a low, right? This low, right? There was liquidity right there. There is liquidity right there. Right, there is liquidity right there, right? And the market makers use this candlestick to hunt that liquidity. There was some accumulation there. Then they use this one. So this one, right, is actually an institutional candle, right? Also, you can actually see that these guys actually hunted this low as well, using that same candlestick, right? They just moved slightly lower than that. If you zoom your price, they moved lower than that. So it means that was another liquidity there, right, that they took with the very candlestick, right? So this makes this candlestick an institutional candlestick, right? So it's now a relevant POI, right? So it means you can take this order block, mark it all the way to the right, and that becomes your POI. So now it means that instead of using this as your risk, right? From 132 pips. From 132 pips, you could actually reduce your risk, right, using this POI, because it's relevant. They took this liquidity and that liquidity, right? Because these two obstacles were actually overlapping, right? So you'd reduce your risk just to this zone, right? Let's push it to where our POI was, right? Then remember, from 100 something pips, now we're only risking 83.9 pips to make 304 pips more than 1:3, right? 3.5, 1:3.5 risk reward ratio, right? So this was actually a better POI to actually look at, right? So if you look at this impulse move, we had two POIs that were there that were actually relevant, and those are the ones that you actually use on this trade. So whenever you're trading, guys, my advice this year is, whenever you're looking for a POI, consider a POI that is an institutional candle. Consider order blocks that are institutional candlestick. Don't just use that theory of saying the last bearish candlestick before price changes direction, that's my order block, because you're going to miss it out, right? Remember, if someone was using this as an order block, right, they're going to be hunted here, right? Or if someone was actually using, let me say this one, you just see this is your last bullish candlestick before price change, then you just mark it like that, you expect price to turn here. Guys, did they manipulate anything to the left? Nothing, right? So if there is nothing that was manipulated to the left, then it's not an order block, right? Or let me say it's not a relevant order block. Our relevant order blocks that are going to give us our high probability POIs are the ones that actually manipulated price, right? The ones that are actually institutional candlesticks, right? So hopefully this video will actually be helpful as we begin the year, right? In trading our currencies, right? If it is helpful, don't forget to press a like, comment, and share the video to your friends, right? If you haven't subscribed to this channel, make sure that you subscribe, right? Remember to also join our WhatsApp group, right? This year we'll be using a WhatsApp group, right? I'll drop the link in the comment section, in the description below. Then you actually follow that WhatsApp group, right? So thank you guys for your time.